Welcome back to the channel, everyone. Today, we are diving into a topic that impacts millions of South Africans directly, especially those approaching retirement age or already depending on government assistance to make ends meet. We are talking about the SASSA Old Age Pension in 2025. Whether you're 55 and starting to think about your future or already receiving your monthly grant, this video will walk you through everything you need to know: how much you'll get, what changes have come into play this year, and how men and women are affected as they age. It's a crucial update in a time where the cost of living continues to rise and financial planning has never been more important. If you're wondering how much support you can count on from the government now and in the years ahead, you've come to the right place. To kick things off, let's establish what the SASSA Old Age Pension actually is. The South African Social Security Agency, better known as SASSA, is responsible for distributing social grants to eligible citizens, and among the most important of these grants is the Old Age Pension. It's a lifeline for many elderly South Africans, helping them cover essential needs like food, electricity, rent, and medical expenses. The grant is meant to ensure a basic standard of living for those who no longer have a stable income due to age-related retirement or inability to work. With the country's economic challenges and inflationary pressures, the value and accessibility of this pension have become hot-button issues in 2025. Now, let's talk about eligibility. As of this year, the general age for receiving the SASSA Old Age Pension remains 60 years and older. However, there's an increasing push and public conversation about lowering this age to 55, especially for women and vulnerable workers who have faced physical labor throughout their lives. While no official legislation has passed that lowers the pension age to 55 just yet, there are growing pilot programs and proposals in discussion that could very well make it a reality in the near future. For now, though, 60 is the minimum age, with the grant increasing gradually for those who are 75 and older. One of the most important questions being asked right now is, how much is the pension amount in 2025? This year, SASSA has officially increased the grant amount, thanks to the annual budget speech that took place earlier in February. In 2025, South Africans receiving the old age pension can expect 2,180 per month if they are between the ages of 60 and 74. For those aged 75 and above, the grant amount has been bumped up slightly higher to 2,200 per month. This increase reflects the government's recognition of the rising cost of living, particularly for the elderly, who often face growing expenses in healthcare and basic needs. The R20 difference between the two age groups might not seem like a lot on paper, but for pensioners living on fixed incomes, every rand counts. The amount may still fall short of what is needed to live comfortably, especially in urban areas where rent and groceries are expensive, but the government insists that it is a step in the right direction. It's also worth noting that these increases are part of a broader strategy to adjust all social grants in line with inflation and economic growth. However, many experts and advocacy groups are still calling for more substantial reforms to address elderly poverty. Let's break this down further for men and women. SASSA does not differentiate pension amounts based on gender. Both men and women receive the same base amounts once they qualify by age. However, the experience of aging and economic dependency can be very different for men and women in South Africa. Statistically, women are more likely to live longer than men, but they are also more likely to have worked in lower-paid jobs or informal sectors with little to no retirement benefits. This often means women depend more heavily on the old age pension. There's a growing public dialogue about introducing gender-sensitive policies in Social Security to address these disparities. For example, some civil society organizations have been proposing a gendered model of social pensions that acknowledges the additional burdens women often face, such as unpaid caregiving work throughout their lives. While these ideas are still in the advocacy phase, the 2025 increase in pension amounts is viewed as a partial acknowledgement of these realities, even if it stops short of offering gender-specific benefits. Nonetheless, the fact that these conversations are happening at the national level suggests a changing attitude toward how pensions and aging are viewed in the broader social context. What about the idea of early retirement or early pension access at 55? This is one of the hottest topics in 2025, especially given South Africa's high unemployment rate and the challenges older workers face in remaining employed in physically demanding industries. As of now, the legal pension age through SASSA remains at 60, but several provinces and labor unions are lobbying for policy changes that would allow workers, especially those in manual labor or caregiving roles, to apply for reduced pensions from the age of 55. This wouldn't give them the full amount but a slightly reduced grant that helps bridge the gap until they turn 60. It's also important to talk about the means test, because not everyone who is 60 or older automatically qualifies for the old age pension. To be eligible, your income and assets must fall below a certain threshold. In 2025, the means test requires that single individuals earn less than 96,840 per year, or about 8,070 per month, and married couples must have a combined income of less than R193,680 per year. Your assets must also be below R1,372,800 if you're single, or R2,745,600 combined if you're married. These limits are in place to ensure that the pension goes to those who truly need it, but they also mean that many people just above the threshold may not qualify, even if they're struggling. So what happens if you do qualify? Once your application is approved, you will begin receiving the monthly grant, which is typically deposited directly into your bank account or collected through SASSA Pay Points. SASSA has been modernizing its payment systems, so in 2025, more recipients are being encouraged to use bank transfers, mobile money platforms, or official SASSA cards. This shift aims to reduce long lines at physical payout centers and improve overall efficiency. The agency has also introduced new biometric verification methods to ensure the safety of recipients and minimize fraud. Another key update in 2025 is the improvement in the SASSA online application system. Seniors no longer have to stand in long queues for hours just to apply or update their details. The SASSA website has been revamped to be more user-friendly, and there's even a mobile app in development that will allow seniors to track payments, update their banking details, and get reminders about important deadlines. This digital push is helping close the accessibility gap for seniors, particularly those in rural areas or with mobility challenges. For those worried about delays in receiving their pension, it's worth noting that SASSA has made some strides in improving its turnaround times. Previously, it could take months for an application to be processed, especially during times of high demand or public service disruptions. But now, with better digital infrastructure and increased staffing, the average processing time has dropped significantly. If all your documents are in order, you could start receiving payments within 4 to 6 weeks of application. What documents are needed to apply in 2025? You still need a valid South African ID, proof of residence, proof of income or lack thereof, and a bank statement. If you're married, you'll also need to include your spouse's income information and marriage certificate. All documentation must be up to date, and SASSA has tightened its rules around verification, so make sure everything you submit is accurate to avoid delays or disqualification. Let's talk now about how inflation is affecting the value of the pension. Even with the increases announced in 2025, many pensioners are still struggling. A loaf of bread, a bag of maize meal, and basic electricity units have all gone up in price. What 2,180 buys today is less than what around 1,990 could buy 2 years ago. While the grant amount is technically higher, its real-world value has been diminished by inflation. The government has acknowledged this issue and insists that future increases will be tied more closely to the Consumer Price Index to better protect the purchasing power of seniors. Some provinces are even piloting complementary programs to help pensioners stretch their grant money further. For example, there are regional food voucher programs, discounts on municipal services for registered pensioners, and even free public transport days in cities like Cape Town and Durban. These supplemental benefits can make a big difference in helping seniors live more comfortably on their fixed income. Advocacy groups are pushing for these initiatives to be rolled out nationwide, particularly in underserved rural areas. We also need to address the reality of medical costs. For many elderly South Africans, a significant portion of their grant goes to medications, doctor visits, and transport to health facilities. While the public health system does offer free services, long waiting times and understaffed clinics often mean seniors must turn to private pharmacies or transport services, which come at a cost. Some have called for a health stipend to be added to the old age pension or a separate medical grant for those over 70. While no such policy has been enacted yet, the need is being recognized in public discussions and parliamentary committees. There's also talk about a new SASSA program that would introduce a two-tier pension system, where those over 80 receive a higher grant with additional support services. This concept is still in development, but it's gaining traction, especially as the population continues to age and longevity increases. As people live longer, they face more years of retirement and higher expenses. Ensuring they are adequately supported is becoming a growing concern not just for families, but for the entire social system. Let's wrap up by addressing one last question we often hear from our viewers: can you work and still receive the SASSA Old Age Pension? The answer is yes, but with limits. If your income exceeds the threshold set by the means test, you may see your grant reduced or suspended. However, part-time work or small earnings from hobbies or crafts generally won't disqualify you, especially if you report them correctly. It's always better to be transparent with SASSA about your income so you don't run into trouble down the line. The system is designed to support, not punish, seniors trying to supplement their income. In conclusion, the SASSA Old Age Pension in 2025 has seen modest but meaningful improvements. With grant amounts of $2,180 for those aged 60-74 and $2,200 for those 75 and older, along with improvements in application systems, payment platforms, and ongoing policy discussions around lowering the pension age and addressing gender and health disparities, the system is evolving. There's still a long way to go, especially in improving the real-world impact of these grants amid inflation and increasing costs, but it's clear that the needs of South Africa's elderly population are gaining more attention. Thanks for sticking with us through this important update. If you found this information helpful, be sure to hit that like button, share this video with someone who might need it, and subscribe to the channel so you don't miss any future updates on SASSA, pensions, and financial support in South Africa. Stay informed, stay empowered, and we'll see you in the next video.